Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Rains here for Top Stock Picks at Zacks. Today I'm looking at ON Semiconductor, which trades on the ticker ON. ON Semiconductor was originally a spin-off of Motorola in the late 1990s, and it's focused mainly on growth areas within the automotive and industrial markets. ON Semiconductor's intelligent power and sensing technologies support industries such as electric vehicles, connected vehicle tech, industrial automation, sustainable energy grids, cloud infrastructure, and beyond. The company posted its strongest top-line expansion since 2017 last year and provided upbeat guidance when it beat our Q4 estimates. ON Semiconductor's adjusted fiscal 2021 earnings soared 250% on the back of 28% higher revenue, and ON's huge positive earnings revisions for 2022 and 2023 help it land a Zacks rank #1 strong buy right now. The firm is also focused on boosting its margins and continuing to exit what it calls low-margin non-core products. And then back in November, the company completed its purchase of GT Advanced Technologies. The firm is a key supplier of key component that are needed to manufacture all EVs, chargers, and more. And looking ahead, Zacks estimates call for the company's overall 2022 earnings to climb another 41% on top of last year's massive jump. Meanwhile, its revenue is projected to climb 14% this year, with more top and bottom line growth expected in 2023 as well. And then in terms of its stock price performance, the stock has crushed the broader Zacks technology sector over the last decade, with it up 530% versus the broader Zacks tech sector's 340% climb. This includes a 275% run in the last 2 years, which is off those COVID lows, which blows away its broader analog semiconductor industry's 95% run. And then luckily for investors who might have missed out on this recent run, the stock has dropped about 20% from its early January peaks of over $71 per share to hover at the moment around $53 per share. And the stock's current Zacks consensus price target marks almost 26% upside to those levels it's sitting at the moment. And then in terms of the valuation side, ON trades at 12.5 times forward 12-month earnings, which marks a discount to its own 5-year median despite its run, and 50% value compared to its own highs during that stretch, and then a 25% discount to its highly ranked Zacks industry. And then on top of that, Wall Street's really high on the stock as well, with 14 of the 20 brokerage recommendations that Zacks has coming in at strong buys. So overall, ON Semiconductor might not be the splashiest name in the chip space, but it's poised to grow by supplying key components to growth markets that are really just getting started. So that does it for me, and now I'm going to send it over to Dave.
Well, thanks for that intro, Ben. And I've got my top stock pick of the week. It is Zacks rank #2 buy Archer Daniels Midland, ticker ADM. Let's take a look at Zacks.com and see why I like it. Archer Daniels Midland is a Zacks rank #2 buy. Check out the style scores here: a B for value, A for growth, B for momentum. Help it round out with a VGM composite score of A. The agriculture operations industry is in the top 33% of our Zacks industry rank. So that means that this isn't the only company in that industry that's been seeing earnings on the rise. We can take a look at the chart here, and we'll dig into that a little bit later in our price consensus and EPS surprise chart, but nice little bottom left to top right action. That means the stock is going up. Earnings coming up on April 26th, so put that on your calendars. Last quarter surprise was 10% better than expected. For those of you folks that like to take a look at things like PE ratios, ADM is trading 18.38 times earnings. Compare that to the S&P average of 19.78, but it's a tad richer than the industry average of 17.2%. So let's take a look further down on these detailed estimates. You can see what's happening here. So we have analysts increasing their estimates to the upside over the course of the last week for the current quarter, next quarter, current year, and next year. That's helping the stock to a Zacks rank #2 buy. Zacks consensus estimates on the earnings side, not much growth here. Actually, a 19 bip contraction for the current year. Next year, another slight contraction. Okay, so on the sales side of things, 2.39% growth for the current year and a 2.1 3% contraction. So they're going to get it, then they're going to give it back a little bit. So overall, it's not the growthiest of names, but this is not the growthiest of markets. Remember, my favorite chart, price consensus, EPS surprise on Zacks.com. Here you'll see why. The black line represents the stock's price. The multicolored lines represents the evolution of our Zacks consensus estimates over time. Little green arrows, earnings beats. Red arrows, earnings misses. So what's happening here? Look at how the stock consistently overpromised, underdelivered for a few years from 2019 throughout 2020. Then all of a sudden, these earnings started to tick up and the stock kept beating quarter in and quarter out. Then you had this bit of divergence. What I mean by that is stock price came down, earnings stayed up. Inevitably, what happens? The stock rallies to catch up with those earnings. So earnings have been on the move. It looks like the growth is slowing down a little bit, but still, look at that motion, bottom left to top right. And seeing as how we just had analysts over the course of the last week up the ante on these numbers, I think this trend is likely to continue and the stock is likely to keep on punching above its weight. So there you have it, folks. That is my top stock pick of the week. Don't forget to check out Zacks.com/promo for this week's promotion on Commodity Innovators, a very hot part of the market, which we should be talking about and learning about more right now. So for Ben Rains and I and everybody else here at Zacks.com, thank you so much for watching, and we'll see you next week.